Yo
Recording
guys,
in progress.
welcome to this this content. I'm super excited to actually have this sharing with you, and this is Tipwise, and I'll be sharing with you tips to actually consider before, so you will not be getting heartbroken when you are investing into your cryptocurrency. So I'll be sharing this tip with you, and I'm super excited to share with them with you. I've listed them out, and I'll be sharing everything with you. So my name is Tunde Joseph, and I'll be your host today behind the old Peepwise. Welcome to Peepwise, and we are here to educate you about cryptocurrency and investing really right. And I've seen quite a number of people making investment mistake when it comes to cryptocurrency, and at the end of the day, they come out shouting, "Hey, um, I've made the wrong mistake. This is it," and all. So I'm very sure by the time we are done, you will have a better understanding and a better way to actually approach your investment, your portfolio, and you actually increase your profitability. So let's get into the real deal as I'll be starting up. So now the first thing I actually want to talk about is um, the right investment perspective. You need the right investment perspective. I just want to be um, as direct as possible so that you don't like I don't get it too serious. So now you actually need the right investment perspective, and this is one of the things I actually see that people miss out. They don't really have the right investment perspective, and all they just come to do is when I invest my money, I just want to make it up, boom, and start cashing out the money big, boom, 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 boom. And the funniest thing, the most amazing thing is the the um the people you actually see living that large life, living this thing. By the time you see them doing all those things, oh Joseph, you're making this thing. Oh Joseph, you're making that. Hey, look at this, you're making that. They have been on the journey for a long time, at least minimum of 2 years. They've been into the whole thing minimum of 2 years. So you all those things that you're just seeing as overnight sources, it has been dots they have been creating for a long time. They have been creating for a long time, and at the end of the day, the old dots connect together, and it seems like a overnight thing, but it's not overnight. So you need the right investment perspective. You need to know that investment on its own, investment is risky. Investment is risky. There is no assurance of anything in investment when it comes to investing in the financial market. You don't have any assurance of anything. Assurance of profit, no. You see, when you're trading with any platform, either Binance, either anyone we are using at all, even all these things apply to aside outside crypto, stock, and forex and all these things. So when you're investing, they don't guarantee you profit. They will tell you plainly that investing is risky or don't guarantee profit. Any loss you incur is all on your side. And another thing I actually want to say is these are just my own tips. These are just my personal opinion based on my studies and my experiences and my knowledge that I've gathered over the years. So I'm not a financial advisor, and yeah, just do your own research and put things into verification and actually take action based on what you are informed about, not what you just randomly. So this is just my own decision. So yeah, I'm not standing as a financial advisor that this is how things are meant to be. So I'm just giving you my own knowledge about what I have been able to gather over the years and gotten me results, and so that's it. So investment is very, very risky, and you need to understand risks to your reward. So, but people focus so much on the reward and not thinking about the risk. They focus so much on the reward and not thinking about the risk. And at the end of the day, all people are trying to maybe get you into investing into something. So they just be pointing you into the reward and making you excited until reality get to you actually get reality gets it done on you, or how do you put it, like you actually know the reality of things, that this thing actually involve risk. Because most times when beginner actually get into investing, the first thing they just put their mind on is just the reward. I'm in for the reward, I'm in for the reward, and at the end of the day they start playing their game in such a way that they are just focus on the reward, focus on the reward. I just want to make all the money in the day. I just want to, and all these things you need to understand that they are good. So you need to have the right perspective about investment. There are a lot of things that is going into it, that goes into it. You need to study right. You need to go into the old stuff. Like there are a lot of things that actually go into it. But the first thing I want you to know is you need to understand that risk is involved in whatever you're doing. You need to consider your risk first, and you need to know that investment is not just what everybody does, the result side. There, you need to calculate your risk, same as you need to also calculate your reward. You need to strike a balance. You need to strike a balance on the whole scale. Yeah, you need to strike a balance on the whole scale. So, and by the time you actually know, okay, this is what I'm going to, this is what I'm doing. So it will reduce a lot of things, and it will help you position yourself better. It's just all based on two things: timing, your timing, and positioning. Timing and yeah, positioning. Yeah, positioning and timing also work together. Timing and positioning. So if you get this right, you have a lot of advantage over every other person. So another thing that you need to consider to actually avoid all this old is buying, like not buying at all-time high. By the time beginners, most time beginners, what they do is they buy at all-time high and thinking, oh yeah, we are actually getting things up and blah blah blah. And let me share something with you. I'm trying to share something with you. Yeah. So yeah, sorry about that. So now this is my screen. This is the Bitcoin. This is the Bitcoin chart. So if you don't understand it, no problem. And most people, let me use candles so that you can understand. Most people, what they do is they actually buy around this area. They tend to go ahead and buy around this area. Whoa, Bitcoin is pushing really, really up. Let's buy, let's buy, let's buy, let's buy. That is when you're buying. This is not the right time to actually buy coin. This is not the right time to actually invest your money. Whatever it is, either you're buying coin, either you're buying stock, either you're buying anything at all. When the stuff is at high price, that's not the best time to actually buy whatever you want to buy. And you can see so well that this is this actually going down, really down, and we still have something like this. So then maybe now finally go up again. So, but not now. I don't know. I'm not analyzing now. I'm just giving you what I think it is. So now you need to understand that buying at all-time high is not a smart way to invest. That everybody is buying, yeah, it's going up, it's doing this. No, that's not the best time to actually buy um your any assets at all. That's not the best time to buy any assets at all. Oh, did I lose my whiteboard? No. All right. So that's not the best time to buy at all. The whole deal of investing is buying. You need to understand buying. This is the whole code of investing: buying low, right, and selling high. Buying low and selling high. This is the whole code of investing, and this to be what is guiding you every time. Am I buying low? Now, am I selling high? This is what will determine if you'll be profitable or not. If you're profitable or not, it's better you buy something when it's at $1 and you sell when it's at $5. So that's just how it works. Buying at $1, sell at $5. So you want to avoid following people buying the hype, buying the hype. Always do the opposite, all the time. Like when you see people buying, and see people scared of buying, that's when you should buy. When you see people buying, a lot of people trooping in, that's when you should be looking at not buying. That's when you should withdraw from the market and not buy, right? Or when you're holding anything, that's when you should sell. Like now, Bitcoin is just pumping and moving up. Everybody's chucking their money, and that's why the whole thing doesn't drop that much. So you need to understand this thing. Buying at a high price, at the highest level of price, at all-time high of any assets at all, without any coin is not a very good way to buy. And if you are doing that, you will be you'll be holding for a longer time because you don't know the next time it will actually come to the new all-time high. I guess Bitcoin actually took like maybe 3 years or 4 years or so to actually get back to the all-time high that is created from years back. So you need to be very, very careful and want to be a smart investor, and you're not here to work for the market. So the next thing, another thing people avoid to look at is investing more than what they can use, more than what you can lose. When you are investing, the first thing I advise my student, I advise everybody coming for training and all, is first of all, ensure you are investing what you can lose, the amount of money you are comfortable losing. By the time you lose it, you are not emotionally attached to it, whereby it won't affect your way of life, it won't affect your daily business or anything, whereby you lose yourself and not be comfortable or lose your mind. You need to invest the amount of money that by the time you invest it, if you lose it, if your account if your portfolio gets liquidated, it will not affect you. And I guess 10%, 10 to like 30%, maximum of 30% of your income is not a bad deal, right? Mars. I can't dictate for you, but everybody have the amount of money you can afford to lose, whereby you will not really feel. So don't come into investing like, yeah, I'm going to surely get this money. It's a probability game. It's a game of probability, not possibility, right? So there's no probability that you are going to make that stuff, even if you have everything all balanced. Like, I mean, your analysis, your chart, your everything. There's sometimes that the trade will still go against you. Why? Because you're not the one in charge of the market. You're not the one directing the market. You don't have control over the move of the market. You can only predict and position yourself on a high probability scale for profitability, right? So it's very, very different. So only invest the amount of money you are willing to lose when you come to investing. And this is why people get it all wrong. By the time you invest more money that you are not ready to lose, and by the time they lose that money, what they come up with is this thing is not working. I've tried it before. You say, I've tried it before. Man, it's not good. It's not good. Did you follow the due process? And this is why we are actually bringing this content to you, so that you have the right knowledge about investing and you don't want to make the same mistake of investing your major money. Invest only your extras, your extra money, not money you live on, not money you live on all the time and all. Your extra money, your excess money. So that is it. No matter how strong it is, though, yeah, it is possible to actually invest all your money and end of the day, you actually get out really big and make big fund. But on a logical sense, it is not advisable to do that. When Bitcoin went from 60K to like 30K, a lot of people lost their money, a lot of people lost their mind, a lot of people account got liquidated. So you don't want to be in this state. You want to be a smart investor, right? So the next thing, I hope you got that. So the next thing, another mistake is not taking profit. Yeah, not taking profit. Quite a number of people, they just buy, let me say I bought my coin at $1, and you just hold and continue holding 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 and continue holding. One thing that is sure is, yeah, okay, let me just say all come down to $100, right? $100, and there's a time you can see how there's a potential of it coming down. So now, whatever goes up will surely come down. That's just the rule of the market, right? So it will surely come down. It will just be going up and down. It's just the war between people trying to push the market up and people trying to push the market down. So by the time I actually have my money going up to, let me just say $5, right? $5, making $5 profit. I invested $1,000. If I invested $1,000, I invested $1,000, 1K, yeah? So by the time it gets to $5, I'll be having, right? I'll be having 5K dollars, right? And the 5K dollars, what I'm going to do is I'm going to take some of the money out of it. I'm going to take nothing less than 10% of my profit. Yeah, I'm going to take nothing less than 10% of my profit, and I'm going to spend that one. I'm going to enjoy myself. I'm going to feel that, yes, I've taken profit. I enjoy my money. And number two, the next thing you want to do is to keep out your capital. One of the smart way to do is to keep out your capital. Now I take out $1.5, then I leave back what? I leave back 3.5. Yeah. So whatever happened to this 3.5, I won't feel it. Number one, I've taken my capital. Number two, I've taken excess on the capital. So I've made more money on the capital. I've made 1,005 out of my $1,000. So I'm still holding. So by the time I see something like this, I'll not be scared. I won't. Why? Because I am just trading with the bank money. I'm trading with my profit, my excess profit. So you can keep continue holding and continue holding. And when let me say the 3.5 actually get to maybe 5K again, I take $500 or 700 or 1,000 depending on you, but always have quite a number of money in this. I just take some, maybe get another access or invest in another place or something. And I know that I know that I've taken profit of that very thing. So there is always a sense of fulfillment by the time you take profit of your money and you spend on yourself and you feel it. You're not trading for the market, you're trading for profitability to make more money and spend the money on you, not the money on market again. So, and that's how I continue doing, taking profit, taking profit, taking profit, taking profit, taking a little bit out of my profit and allowing my investment grow and grow and grow. Because all the time it will always go up and down. The market will never be rosy all the time. That's just one thing you should know all the time. And the next thing is timing. Timing is actually attached to the all-time high. Timing is very, very important to understand timing when it comes to investing. But investment, like I told you, timing and positioning is very, very key. Timing and positioning information is very, very, very key. By the time you come in at the right time, the time you come in will tell the amount of your profitability, will tell the amount of money, the amount of profit you get. Someone who enter an access of $1 at $1 and held it to $10, right? We make more profit compared to someone who actually got in at $7 and who actually got to know about the whole coin or the whole access at $7 and hold to $10. So what is the difference between the two? The difference between the two is timing. Timing, information, and a lot of things goes into timing, like information, analysis, research, and all the things. Like everything boils down to information, right? So you want to ensure that you are on time. You are on time. Your timing is right. And also one thing I want to tell you about timing is actually thinking long term. Quite a number of people just think short term. Quite like people who actually bought Bitcoin when Bitcoin was $1, and they actually thought Bitcoin at $100 is like the most marvelous features you can actually get, the most marvelous level you can actually get to. But now Bitcoin is at what? 60K. 60K. So imagine you held your coin, and at this point, I'm very sure you'll be having like maybe 500 coin, right? Imagine you held it down to 60K, you will have made more money. So always think long term instead of short term. Always think long term instead of short term. And this, for you to one of the tips to actually help you to think short term is just be taking small profit. It will help you hold your coin long term compared to somebody who is just coming in, going out, and doing all this stuff. So you want to hold your coin long term. And also timing. Another thing is, since the market goes up and down, you can spread your investment. You can spread your investment if you understand the market analysis so well, and which will be on our course. We have this explanation on our course and how to use the app, all the things on our course, but I'll explain that later. So now, if you have $1,000, I can actually divide my money and start investing here. I'll enter here, right? So I have three different entries. So when I see that the assets are dropped drastically, I'll enter again. I'll put some of money. I will enter again. So you won't really feel the money you are investing on the long time and all the side. So you just want to ensure you are coming in at the right time. You can just be spreading your investment and coming in little by little. And this is the same strategy the banks and institutional traders are using when it comes to trading. They don't put all their money at once. They come down, they come back again, they come down, they come back again, and put more money and more money. And that is why we have the market not going in a smooth direction, rather going up and down, forming the overall upward direction. So that's that. I hope you understand that very, very well. So the next thing is lack of technical analysis knowledge. Quite a number of people don't understand technical analysis. They don't understand how you can actually mark up your chart, what the market is saying, reading the market, reading the candles, reading the market, reading to know what the market is telling you per time, right? Before the market, you actually get a fall in the market will tell you. The chart we always speak about it before anything. It will always tell you, just like when rain want to fall, you can. It's not like it's 100% assured, but it will position you better. It's not 100% assured. It will position you better. Like that's why I said it's a game of probability, not of possibility, right? Just like rain want to fall, and you are seeing the cloud getting dark, wind everywhere, and all these things. So that does not mean rain will fall, but these are signs that rain will fall, right? These are signs that rain will fall. So you having a good technical analysis knowledge will help you really help you position yourself to what you are expecting the market. Oh, I'm seeing this signal. I'm actually seeing this. There's a possibility, and there's a possibility that we'll be having a sale very, very soon. There's a probability that there will be a sale very soon. So what I will do is I'll position myself whereby when the market goes down, maybe I've taken some of my profit at that level. When the market goes down, I come in again. So those things will actually help you position yourself better and save you a lot of stress and tears and pressure. So that's that about that. Having a good technical analysis knowledge that will actually help you to also see into the future more than it. And what's the technical knowledge? Technical analysis is actually analyzing the market and assets based on like using mechanism, or how will I put it now, using the trend line, using your indicator, using all those things to analyze the market based on history, using because history will always repeat itself when it comes to the market. History will always repeat itself. So based on history, you use that to mark up your chart. You use that to predict what will probably happen in the future. What will probably happen in the future. So you can actually tell that every Christmas there are more chicken being killed, and every Ramadan period, which is for Muslim, there are more ram being killed. So with that, in the coming year, with that, you can prepare your mind. If you want to sell ram, you know that you should sell ram around the period of Muslim festival, right? And celebration, or whatever you call it. So, and you are not meant to be selling chicken around that period because you will not make more money. So history will always repeat itself. I'm just using that as an example so that you can really connect. So now the next thing is not diversifying. Diversifying your portfolio is very key. Very key. And same thing, if you read from top investors, if you actually read the likes of Warren Buffett and actually look at this, these guys are having investment in diverse streams, in diverse industry, in diverse sectors. So you don't want to have all your head in one basket. All my head in just Bitcoin. All my head in just a cheat coin. All my head in just altcoin. So it's not really good and safe doing that way. And have can have some of your investment in major coin, and the other one in what's it called, in altcoin, and a little in shitcoin, because those ones are just like gamble to me. So for point, so they are very profitable on the long run, like when you actually get the big move. But also they can also rule your portfolio. So you want to diversify. You want to diversify. You have Bitcoin, you have Ethereum. You just share your profit all over, but that doesn't mean you shouldn't do your research, right? I actually help I actually do portfolio. We do portfolio management, and the clients that I had one like 3 months ago, and the guy actually filled his account with some money and all the like. So like 2 3 months later, he have done like 114% on the account, 114%, and he has done 100% like twice within that period of time. So you it just I just it just helped the guy to what's called to diversify his account, and it was really profitable. When this is going up, the other one is covering up for that. So you want to ensure that you're stable, ensure your portfolio is diversified, not just in one. If you're doing stock, don't just put all your egg in stock. You need to diversify a little. Maybe you are making tech the major one that you are investing in. You are making agriculture another thing. You are making health another one. You are making fintech another one. So that's just how to actually go about investing. Like diversifying is very good, very good. So the next thing is overthinking and overweighting. Overthinking and overweighting, and which happen to be the last I'll be talking about. Overthinking and overweighting. Overthinking is, yeah, should I buy? Should I not buy? Oh, it's low now. Oh, I should no. I should wait for a better price. No. You start overthinking, and overthinking lead to paralysis, to paralyze your vision, to paralyze your idea, to paralyze things. Whatever you want to do, just get to do it. Don't think it too long. So ensure you have done your research, and by the time you have done your research, you know you are convinced to a certain level that okay, this is it. Then take your shot, and you're not over leveraging, like you're not over leveraging, or you are not investing your major money. Just go for it. Do what you want to do. When Bitcoin was 9K, some people think, wait, let me wait for it to come down. You're waiting, you're overwaiting. Let me wait for it to come down. And by the time Bitcoin became like changed, it got to 10K, 15K. I could remember last year that I predicted Bitcoin from 8K to 8K to 20, then Ethereum from 174 to 700 plus. And people who actually took advantage of it made money off it. So you don't need to overthink it, in as much you know how much you are risking on an investment and how much you are expecting. And also, so that's, I think I've been able to give you great tips on how to position yourself to avoid outbreak, and to ensure that you are a smart investor in whether crypto or stock or anything. But now we are more focused on crypto side, and more focused on cryptocurrency. So now we and as Pipwise, we are actually having a course, a mini course on how to how to um how to trade futures. Quite a number of people have been asking me, how do I trade futures? How do I trade sport? How do I trade all the likes and all? So if you want to know more about it, I'll be leaving a link below for you to go to for you to get on the course. You just have a course that we have prepared for you, how to use the trading platform, how to go about your leverage, how to use your leverage, how to use the platform, how to enter trade. So if you're new to cryptocurrency or you want to hop your game also, we have that in the pack course. We have a powerful pack course for you that will take you step by step into the whole thing. So, and we have quite a number of students who have also gone through this whole process, and they are making it, have been very well today. So if you want to go into that, you can come into that also. So and on the other side, for people who actually want to go into how to how to analyze the market, how to see the market, how to know the whole technical analysis of a thing. So we have a course on technical analysis also, and there's another course on research, how to do your research on coin, how to make research on the coin, the next coin you should actually position yourself. So technical analysis and research actually will go hand in hand. will be very, very good. With technical analysis, you can still do some things, some major things. But if you have your research with you, it should be a combo, it should be a good advantage for you, a very, very good advantage for you. So that's that about that. And for people who actually just want signals, I just want signals, I just want to get signals, I just want to get signals for my trade and all. We have signals also. So depending on the one you want to go for, but I'll always advise you go for this course first of all before you get into anything, because everything that is taught here, you'll be applying here. And anything that is taught there also, you actually be applying when we start teaching you technical analysis. So I would advise you actually go for this first of all. And also, if you are interested in going for this, actually we are doing a promo right now and we are getting 20% of the normal price, 20% of the normal price for the first 10 people to click this link. I'm going to drop it around the video or something. The 10 first people to drop the to get in, they will be getting 20% discount. And because we want to really, really ensure people actually get to plug into the opportunity the cryptocurrency is giving right now. So if you don't want to miss out of this and you want to join the rest of the students that having massive sources in this investment of the thing and cryptocurrency thing, get into the whole thing, just click on the link. And I remain Tunde Joseph, and this is Wise. And I'm super excited to share this content with you. Let's go.